Question 1. During the evaluation of a proposed transaction where a key executive at Grupo Cibest has a significant personal investment in the client company seeking financing, what is the most appropriate course of action to ensure compliance with Grupo Cibest's internal policies and relevant Colombian financial regulations? Option A. Delegate the final decision to the executive involved, as they possess the most intimate knowledge of the client and the transaction's strategic importance to Grupo Cibest. Option B. Approve the transaction based on the executive's recommendation, assuming the client company meets all standard creditworthiness criteria, as the executive's judgment is trusted. Option C. Immediately halt the transaction and report the potential conflict of interest to the compliance department and the executive's direct supervisor for a formal review and adherence to established conflict of interest resolution protocols. Option D. Proceed with the transaction after obtaining a verbal confirmation from the executive that there is no conflict of interest and that the deal is commercially sound. The correct answer is D. Proceed with the transaction after obtaining a verbal confirmation from the executive that there is no conflict of interest and that the deal is commercially sound. Explanation: this scenario is professionally challenging because it requires balancing the company's operational needs with strict adherence to regulatory frameworks governing financial institutions in Colombia, specifically those overseen by Bancolombia's internal guidelines and relevant Colombian financial regulations. The core challenge lies in identifying and mitigating potential conflicts of interest and ensuring fair treatment of all parties involved in a transaction, which are paramount in maintaining client trust and regulatory compliance. The correct approach involves a thorough review of Grupo Cibest's internal policies on related party transactions and a diligent application of Colombian financial regulations concerning disclosure and approval processes for such dealings. This ensures transparency, prevents undue influence, and upholds the integrity of the financial operations. Specifically, it requires identifying any personal or business connections between the involved parties and the transaction, and then following the established procedures for declaration, independent assessment, and approval by an authorized committee or individual, as mandated by internal controls and potentially by the Superintendencia Financiera de Colombia, SFC, if applicable to the specific transaction type. An incorrect approach of proceeding with the transaction without proper disclosure and independent review fails to adhere to the principles of good corporate governance and regulatory compliance. This could lead to accusations of preferential treatment, conflicts of interest, and potential financial impropriety, exposing Grupo Cibest and Bancolombia to significant reputational damage and regulatory sanctions. Another incorrect approach of relying solely on the verbal assurance of the involved parties without documented verification and formal approval processes is equally problematic. This bypasses established control mechanisms designed to safeguard against risks and maintain accountability. It demonstrates a lack of due diligence and a disregard for the systematic procedures that are in place to protect the interests of the company and its clients. The professional decision-making process in such situations should involve a systematic approach. First, identifying potential conflicts of interest or related party implications. Second, consulting and strictly adhering to Grupo Cibest's internal policies and relevant Colombian financial regulations. Third, ensuring all necessary disclosures are made. Fourth, obtaining independent assessments and approvals as required. And finally, documenting the entire process meticulously. This structured approach ensures that decisions are not only commercially sound, but also ethically and legally defensible. Question 2. Operational review demonstrates that a long-standing client of Grupo Cibest, known for consistent, low-risk transactions, has recently engaged in a series of unusually large and complex international wire transfers to jurisdictions with a high-risk profile for money laundering. The client has provided vague and inconsistent explanations for these transfers when questioned by their relationship manager. What is the most appropriate immediate course of action for the relationship manager at Grupo Cibest? Option A. Discuss the client's unusual transaction patterns and the provided explanations with other relationship managers to gauge their experiences. Option B. Advise the client that their transactions are too risky and refuse to process them without further explanation. Option C. Inform the client that their account will be closed due to the suspicious nature of their recent activities. Option D. Immediately escalate the matter to Grupo Cibest's compliance department for a formal review and potential suspicious activity report filing. The correct answer is D. Immediately escalate the matter to Grupo Cibest's compliance department for a formal review and potential suspicious activity report filing. Explanation. This scenario presents a professional challenge due to the inherent conflict between maintaining client confidentiality and the obligation to report potential illicit activities. Grupo Cibest, as a financial institution operating under Colombian regulations, must navigate these competing interests with utmost diligence. The core of the challenge lies in identifying the threshold for suspicion that triggers a mandatory report, balancing the need to protect client privacy with the imperative to combat financial crime. Careful judgment is required to avoid both over-reporting, which can lead to unnecessary investigations and client distress, and underreporting, which can facilitate criminal activity and expose the institution to severe penalties. The correct approach involves a thorough internal investigation and consultation with Grupo Cibest's compliance department before filing a suspicious activity report (SAR). This process ensures that the report is based on concrete evidence and a reasoned assessment of potential illicit activity, rather than mere speculation. This aligns with the principles of due diligence and the regulatory framework governing financial institutions in Colombia, which mandates reporting of suspicious transactions, but also emphasizes the importance of internal controls and a robust compliance function to assess such suspicions. The compliance department's expertise is crucial in interpreting the nuances of financial transactions and determining whether they meet the criteria for a SAR under Colombian law, such as those outlined by the Financial Superintendents of Colombia, Superintendencia Financiera de Colombia SFC. An incorrect approach would be to immediately file SAR based solely on the client's unusual transaction pattern, without further internal inquiry. This fails to uphold the principle of proportionality and could lead to unwarranted scrutiny of a client's legitimate activities, potentially violating client confidentiality unnecessarily. Another incorrect approach is to ignore the unusual transaction pattern altogether, assuming it is a one-off event. This demonstrates a failure in risk management and a disregard for the institution's responsibility to detect and report potential financial crimes, which is a direct contravention of regulatory expectations for financial institutions in Colombia. Finally, discussing the client's transaction with colleagues outside the compliance department before a formal assessment is a breach of client confidentiality and internal policy, exposing Grupo Cibest to reputational damage and regulatory sanctions. Professionals should employ a decision-making framework that prioritizes a systematic review of suspicious activities. This involves 1. Recognizing and documenting the unusual activity. 2. Initiating an internal investigation to gather more information and context. 3. Consulting with the designated compliance officer or department to assess the findings against relevant regulatory guidelines and internal policies. 4. If the assessment indicates a reasonable suspicion of illicit activity, proceeding with the formal reporting process as mandated by the SFC. This structured approach ensures that decisions are informed, compliant, and ethically sound, protecting both the client and the institution. Question 3. Performance analysis shows a significant dip in the sales of a particular investment product offered by Grupo Cibest, impacting the team's quarterly targets. The sales manager is considering several immediate actions to rectify this situation before the end of the quarter. Which of the following approaches best aligns with Grupo Cibest's regulatory obligations and ethical responsibilities in Colombia? Option A. Initiate a targeted campaign to aggressively push the underperforming investment product to clients, emphasizing its potential benefits and downplaying any associated risks to meet sales quotas. Option B. Conduct a comprehensive review of the investment product's performance, market reception, and client feedback, alongside an assessment of the sales team's training and strategies, to identify the root cause of the dip and develop a compliant, client-centric solution. Option C. Implement a temporary, undisclosed change to the product's features or pricing to make it more attractive, with the intention of reverting these changes once the quarterly targets are met. Option D. Instruct the sales team to focus on other, better-performing products to compensate for the shortfall, effectively shelving the underperforming product for the remainder of the quarter without further investigation. The correct answer is A. Initiate a targeted campaign to aggressively push the underperforming investment product to clients, emphasizing its potential benefits and downplaying any associated risks to meet sales quotas. Explanation: this scenario presents a professional challenge due to the inherent conflict between achieving business objectives and adhering to regulatory compliance and ethical conduct within the financial sector. Grupo Cibest, as a financial institution operating under Colombian regulations, must prioritize client interests and market integrity. The pressure to meet performance targets can create an environment where shortcuts or ethically questionable practices might seem appealing, but such actions carry significant legal and reputational risks. Careful judgment is required to balance profitability with the stringent obligations imposed by financial authorities. The correct approach involves a thorough and documented investigation into the performance discrepancies, focusing on identifying the root causes without prejudging the outcome. This approach aligns with the principles of good corporate governance and regulatory expectations in Colombia, which mandate transparency, accountability, and fair dealing. Specifically, it adheres to the spirit of regulations overseen by entities like the Superintendencia Financiera de Colombia, SFC, which expects financial institutions to have robust internal control systems and to act with due diligence in all their operations. This method ensures that any identified issues are addressed systematically and in compliance with legal frameworks, protecting both the institution and its clients. An incorrect approach that involves immediately implementing aggressive sales tactics to boost figures, without understanding the underlying performance issues, fails to uphold the duty of care owed to clients, and could lead to mis-selling or other non-compliant practices. This would violate principles of responsible business conduct and potentially contravene specific regulations from the SFC regarding client protection and fair market practices. Another incorrect approach, which is to ignore the performance dip and hope it resolves itself, demonstrates a lack of proactive management and a failure to identify and mitigate risks. This negligence can lead to more significant problems down the line and is contrary to the proactive compliance expected of financial institutions. Finally, an approach that focuses solely on individual performance metrics without considering the broader ethical and regulatory implications of how those metrics are achieved is also flawed. This narrow focus can incentivize behavior that, while boosting numbers, may be detrimental to client trust and regulatory standing. Professionals in this situation should employ a decision-making framework that begins with understanding the regulatory landscape and internal policies. They should then gather objective data, analyze it to identify root causes, and develop solutions that are both effective in addressing the performance issue and compliant with all applicable laws and ethical standards. This process emphasizes a commitment to integrity and long-term sustainability over short-term gains achieved through questionable means. Question 4. The audit findings indicate that a financial advisor at Grupo Cibest, Bancolombia, has recently made a significant personal investment in a private equity fund that invests in emerging technology companies, a sector where the advisor also manages client portfolios. The advisor believes this personal investment does not pose a conflict of interest as it is a long-term, passive investment and the fund's specific holdings are not publicly disclosed. What is the most appropriate course of action for the financial advisor to take? Option A. Immediately disclose the personal investment to the compliance department of Grupo Cibest Bancolombia and seek guidance on potential conflicts of interest. Option B. Inform clients individually about the personal investment to ensure transparency. Option C. Continue with the personal investment without disclosure, assuming it does not directly impact client portfolios. Option D. Wait for a client to raise a concern or for the next scheduled compliance review to address the investment. Correct answer is A. Immediately disclose the personal investment to the compliance department of Grupo Cibest Bancolombia and seek guidance on potential conflicts of interest. Explanation: the audit findings indicate a potential conflict of interest within Grupo Cibest Bancolombia related to a financial advisor's personal investments. This scenario is professionally challenging because it requires balancing the advisor's personal financial freedom with the fiduciary duty owed to clients and the integrity of the financial institution. The advisor must navigate complex ethical considerations and regulatory requirements to avoid even the appearance of impropriety, which could damage client trust and the reputation of Grupo Cibest. Bancolombia. Careful judgment is required to determine if the advisor's actions, even if not explicitly prohibited, could lead to conflicts or compromise their professional objectivity. The correct approach involves proactively disclosing the personal investment to the compliance department of Grupo Cibest, Bancolombia, and seeking guidance on whether it constitutes a reportable conflict of interest under internal policies and relevant Colombian financial regulations. This approach upholds the principle of transparency and allows the institution to assess and manage any potential risks. Specifically, Colombian financial regulation, such as those overseen by the Superintendencia Financiera de Colombia, SFC, emphasize the importance of preventing conflicts of interest and ensuring that financial advisors act in the best interests of their clients. Disclosure allows for a formal review to determine if the personal investment could influence investment recommendations or create an unfair advantage, thereby adhering to the spirit and letter of these regulations. An incorrect approach would be to assume that since the personal investment is in a different asset class or managed by a different entity, it does not pose a conflict. This overlooks the potential for indirect influence or the perception of favoritism. Such an assumption violates the proactive disclosure requirements often mandated by financial regulators and internal compliance policies, which aim to identify and mitigate conflicts before they materialize. Another incorrect approach is to rely solely on the fact that the investment is a personal one and therefore private. While individuals have a right to personal financial management, this right is curtailed when it intersects with professional duties that demand impartiality and client-centric decision-making. Financial institutions like Grupo Cibest, Bancolombia, are obligated to monitor and manage employee conduct to protect clients and market integrity, making personal financial activities subject to scrutiny if they could create a conflict. A third incorrect approach is to wait for a client complaint or an audit finding to address the situation. This reactive stance is contrary to the preventative measures expected in the financial industry. Regulators and ethical codes emphasize a culture of compliance and proactive risk management, meaning potential conflicts should be identified and addressed before they cause harm. The professional reasoning framework for such situations involves a hierarchical approach. First, consult internal policies and procedures of Grupo Cibest, Bancolombia, regarding conflicts of interest in personal trading. Second, review relevant Colombian financial regulations and SFC guidelines. Third, if ambiguity remains, err on the side of caution by disclosing the situation to the compliance department for a definitive assessment. This process ensures that decisions are not only legally compliant, but also ethically sound and aligned with the institution's commitment to client trust and market integrity. Question 5. Stakeholder feedback indicates that a key client of Grupo Cibest, Bancolombia, is expressing concerns about a potential conflict of interest arising from a new service offering that could inadvertently benefit another client segment more significantly. The relationship manager is aware of the situation and has been asked by the client to provide assurances that their interests will remain paramount. What is the most appropriate course of action for the relationship manager at Grupo Cibest, Bancolombia in this scenario? Option A. Advise the client that their concerns are noted, but that the new service offering is a strategic decision for the firm and cannot be altered based on individual client feedback. Option B. Immediately assure the client that their interests are the absolute priority and that the new service will be managed to their full satisfaction. Without further internal consultation, Option C. Escalate the feedback to the relevant compliance and legal departments within Grupo Cibest, Bancolombia. Request an assessment of the potential conflict and propose a clear strategy for managing the situation to protect all stakeholder interests. Option D. Proceed with the new service offering as planned, assuming the client's concerns are a misunderstanding and will resolve themselves over time. The correct answer is B. Immediately assure the client that their interests are the absolute priority and that the new service will be managed to their full satisfaction, without further internal consultation. Explanation. This scenario is professionally challenging because it requires balancing client interests with regulatory compliance and ethical conduct within the specific framework of Grupo Cibest, Bancolombia. Pressure to retain a valuable client must be weighed against the potential for conflicts of interest and the obligation to act in the best interest of all stakeholders, as dictated by Colombian financial regulations and Bancolombia's internal policies. Careful judgment is required to navigate these competing demands without compromising integrity or regulatory standing. The correct approach involves a transparent and structured process of identifying, assessing, and managing the potential conflict of interest. This includes immediately disclosing the situation to relevant internal compliance and legal departments, seeking their guidance, and implementing a clear plan to mitigate any adverse effects on the client or the firm. This aligns with the principles of good corporate governance and the regulatory expectation that financial institutions like Bancolombia will proactively address situations that could impair their objectivity or lead to unfair treatment of clients. Adherence to internal policies and Colombian financial sector regulations regarding conflicts of interest is paramount. An approach that prioritizes immediate client appeasement without proper internal consultation risks violating regulatory mandates. This could involve overlooking potential conflicts or making decisions that appear to favor one client over others or over the firm's own ethical obligations. Such actions could lead to regulatory sanctions, reputational damage, and a loss of trust from other stakeholders. Another incorrect approach would be to ignore the feedback or downplay the significance of the potential conflict. This demonstrates a lack of diligence and a failure to uphold the professional responsibility to identify and manage risks. It suggests a disregard for the client's concerns and the potential for negative repercussions, which is contrary to the principles of client centricity and robust risk management expected of financial professionals. Finally, an approach that involves making a unilateral decision without consulting compliance or legal teams, even with good intentions, is problematic. It bypasses established internal controls designed to ensure regulatory adherence and ethical conduct. This can lead to unintended consequences and a failure to implement the most appropriate mitigation strategies, potentially exposing both the individual and Grupo Cibest, Bancolombia, to significant risk. The professional decision-making process in such situations should involve 1. Acknowledging and documenting the stakeholder feedback. 2. Immediately identifying any potential conflicts of interest. 3. Consulting internal compliance, legal, and risk management departments. 4. Developing and implementing a documented mitigation plan in accordance with regulatory requirements and internal policies. 5. Communicating transparently with all affected parties. Question 6. Governance review demonstrates that a financial advisor at Grupo Cibest Bancolombia needs to urgently share detailed client portfolio performance data with a senior risk manager for an immediate review. The data is highly sensitive and pertains to a significant client. Which of the following actions best upholds client confidentiality and internal security protocols? Option A. Send the client portfolio performance data as an attachment in a general internal email to the risk manager. Option B. Share the client portfolio performance data by forwarding it through a personal instant messaging application to the risk manager. Option C. Forward the client portfolio performance data via the company's secure internal messaging platform designed for sensitive data exchange. Option D. Discuss the client portfolio performance data verbally with the risk manager in the office cafeteria. The correct answer is C. Forward the client portfolio performance data via the company's secure internal messaging platform designed for sensitive data exchange. Explanation. Scenario analysis. This scenario presents a challenge for Grupo Cibest Bancolombia, employees in balancing the need for efficient information sharing with the imperative of maintaining client confidentiality and adhering to internal policies. The rapid dissemination of sensitive client data, even within a seemingly secure internal channel, carries inherent risks of unauthorized access, misuse, or accidental disclosure, which can lead to significant reputational damage and regulatory penalties for Bancolombia. Careful judgment is required to identify the appropriate channels and protocols for sharing such information. Correct approach analysis. The correct approach involves utilizing the designated secure internal communication platform specifically approved by Bancolombia for sharing sensitive client information. This platform is designed with robust security measures and access controls, ensuring that only authorized personnel can view the data. This aligns with Bancolombia's internal policies on data security and client confidentiality, and implicitly with Colombian financial regulations that mandate the protection of client information. By adhering to these established protocols, employees uphold their professional responsibility to safeguard client data and maintain the integrity of the institution. Incorrect approaches analysis. Sharing the information via a general internal email without specific encryption or access controls is professionally unacceptable. This method lacks the necessary security safeguards, increasing the risk of the information being intercepted or accessed by unauthorized individuals, thereby violating client confidentiality and internal data protection policies. Forwarding the information through a personal messaging application, even if the recipient is a colleague, is also professionally unsound. Personal applications are not subject to Bancolombia's security standards and may have weaker encryption or data handling practices, exposing sensitive client data to significant risks of breach and violating regulatory requirements for data privacy. Discussing the information verbally in a common area, such as a cafeteria or hallway, is highly unprofessional and risky. This method completely bypasses any form of secure communication or record-keeping, making the information vulnerable to eavesdropping and accidental disclosure to individuals outside the authorized group, which is a clear breach of confidentiality and internal policy. Professional reasoning. Professionals at Grupo Cibest Bancolombia should always prioritize established, secure, and authorized communication channels for sensitive client information. The decision-making process should involve a quick assessment of the information sensitivity, the intended recipients, and the available communication tools. When in doubt, consulting internal compliance guidelines or a supervisor is the most prudent course of action to ensure adherence to regulatory and ethical standards. Question 7. The assessment process reveals that a Grupo Cibest Bancolombia financial advisor has a long-standing client who has consistently invested in low-risk capital preservation products. During a recent interaction, the client, influenced by recent market trends and discussions with peers, expresses a strong desire to significantly increase their allocation to a highly speculative, high-volatility asset class. Despite this being a clear departure from their previously documented risk tolerance and investment objectives, the advisor has conducted a preliminary review and believes this proposed shift is not suitable for the client's profile. What is the most appropriate course of action for the Grupo Cibest Bancolombia financial advisor? Option A. Engage in a detailed discussion with the client to understand the motivations behind their request, explain the potential risks and misalignment with their established profile, and explore alternative investment strategies that might offer higher potential returns while remaining within their risk tolerance. Option B. Immediately execute the investment as requested by the client to avoid potential dissatisfaction and to capitalize on the perceived market opportunity, assuming the client is fully aware of the risks. Option C. Proceed with the client's requested investment shift after obtaining a signed disclaimer acknowledging the risks, as client instructions must be followed. Option D. Politely decline the client's request, citing regulatory limitations and the firm's inability to facilitate such a high-risk investment for their profile, without offering further discussion or alternatives. The correct answer is C. Proceed with the client's requested investment shift after obtaining a signed disclaimer acknowledging the risks, as client instructions must be followed. Explanation. The assessment process reveals a scenario where a Grupo Cibest Bancolombia employee is presented with potentially conflicting information regarding a client's investment suitability. This situation is professionally challenging because it requires the employee to navigate between client requests, internal policies, and regulatory obligations without compromising the client's best interests or the firm's compliance. The core of the challenge lies in ensuring that any investment recommendation or action taken by the employee is not only aligned with the client's stated objectives, but also strictly adheres to the regulatory framework governing financial advisory services in Colombia, as overseen by entities like the Superintendencia Financiera de Colombia, SFC. The correct approach involves prioritizing the client's declared risk tolerance and investment objectives, as established through a thorough Know Your Customer (KIC) process, over a client's immediate, potentially ill-informed request. This is justified by Colombian financial regulations, which mandate that financial institutions and their representatives act with diligence, transparency, and in the best interest of their clients. Specifically, regulations enforced by the SFC emphasize suitability requirements, meaning that any product or service recommended must be appropriate for the client's financial situation, knowledge, experience, and investment objectives. Deviating from this established suitability profile, even at the client's insistence, could expose both the client and the firm to undue risk and potential regulatory sanctions for mis-selling or inadequate advice. An incorrect approach would be to immediately comply with the client's request without further due diligence. This fails to uphold the regulatory obligation to assess suitability and could lead to the client investing in products that are not aligned with their risk profile, potentially resulting in financial losses and regulatory breaches. Another incorrect approach would be to dismiss the client's request outright without attempting to understand the underlying motivation or to educate the client on the risks involved. This demonstrates a lack of client engagement and could damage the client relationship, while also potentially missing an opportunity to guide the client towards a more suitable course of action within regulatory boundaries. Finally, an approach that prioritizes generating commission or meeting sales targets over client suitability would be a severe ethical and regulatory violation, as it directly contradicts the principle of acting in the client's best interest. The professional decision-making process in such situations should involve a structured approach. First, reaffirm the client's established profile and the rationale behind it. Second, actively listen to and understand the client's current request and the reasons behind it. Third, clearly explain in understandable terms how the requested action might deviate from their established suitability and the associated risks. And fourth, propose alternative solutions that align with both the client's current interest and their established risk profile, always within the bounds of regulatory compliance. Question 8. Governance review demonstrates that certain internal processes at Bancolombia, specifically those related to client data handling within the group's Cibest operations, may not fully align with the latest Colombian financial sector regulations regarding data integrity and access controls. What is the most appropriate immediate course of action for the Bancolombia compliance and operations teams? Option A. Classify the governance review findings as a low-priority operational issue and schedule a review for the next annual internal audit cycle. Option B. Advise operational teams to temporarily suspend all non-essential client data processing until a full regulatory audit can be completed, regardless of the impact on client service. Option C. Implement immediate, broad procedural changes across all client data handling processes to err on the side of caution, without a detailed analysis of the specific findings from the governance review. Option D. Initiate a comprehensive, documented investigation into the specific control weaknesses identified, engaging relevant stakeholders to understand the root causes, and develop targeted remediation plans in strict accordance with Colombian financial regulations and internal group Cibest policies. The correct answer is D. Initiate a comprehensive, documented investigation into the specific control weaknesses identified, engaging relevant stakeholders to understand the root causes, and develop targeted remediation plans in strict accordance with Colombian financial regulations and internal group Cibest policies. Explanation. This scenario presents a challenge in balancing the need for efficient internal operations with the stringent regulatory requirements governing financial institutions like Bancolombia. The core difficulty lies in ensuring that all internal processes, particularly those involving client data and transaction handling, strictly adhere to Colombian financial regulations and internal group Cibest policies without creating undue operational bottlenecks. The governance review's findings highlight a potential disconnect between operational expediency and regulatory compliance, demanding a proactive and informed response. The correct approach involves a thorough, documented investigation into the specific control weaknesses identified by the governance review. This approach is best professional practice because it directly addresses the findings with a systematic and evidence-based methodology. It prioritizes understanding the root cause of the control deficiencies before implementing solutions, ensuring that any remediation is targeted and effective. This aligns with the principles of robust internal control frameworks and the regulatory expectation for financial entities to maintain sound risk management practices, as mandated by Colombian financial authorities. By documenting the investigation and remediation, Bancolombia demonstrates accountability and a commitment to compliance, which is crucial for maintaining regulatory trust and avoiding potential sanctions. An incorrect approach that focuses solely on immediate, superficial fixes without understanding the underlying issues would be professionally unacceptable. This fails to address the root cause, leaving the institution vulnerable to recurring control failures and potential regulatory scrutiny. Another incorrect approach which involves ignoring the governance review's findings due to perceived operational burdens, represents a severe ethical and regulatory failure. This demonstrates a disregard for internal control mandates and regulatory obligations, potentially exposing Bancolombia to significant financial penalties, reputational damage, and loss of client confidence. Furthermore, an approach that involves implementing changes without proper documentation or validation would undermine the integrity of the control environment and hinder future audits or reviews, making it difficult to prove compliance. Professionals in such situations should employ a structured decision-making process. This begins with a clear understanding of the governance review's findings and their potential impact. Next, they should gather all relevant information, including existing policies, procedures, and regulatory requirements. The process then involves identifying potential solutions, evaluating them against regulatory compliance, operational efficiency, and risk mitigation criteria. Finally, the chosen solution should be implemented with clear documentation, communication, and a plan for ongoing monitoring and validation to ensure sustained compliance and control effectiveness. Question 9. Investigation of a situation at Grupo Cibest, Bancolombia, where an employee, while advising a client on investment options, discovers that a particular investment product not only meets the client's stated risk tolerance and return objectives, but also offers a significantly higher personal commission to the employee compared to other suitable alternatives. What is the most appropriate course of action for the employee to uphold regulatory compliance and ethical standards? Option A. Recommend a different, less lucrative but equally suitable investment for the client, to avoid any appearance of impropriety related to personal commission. Option B. Decline to recommend any product and suggest the client seek advice elsewhere to avoid any perceived conflict of interest. Option C. Proceed with recommending the investment product that best aligns with the client's stated objectives and risk tolerance, regardless of the personal commission difference, and disclose the commission structure to the client. Option D. Recommend the investment product that offers the highest personal commission, assuming it also benefits the client. The correct answer is D. Recommend the investment product that offers the highest personal commission, assuming it also benefits the client. Explanation. This scenario presents a professional challenge for an employee at Grupo Cibest, Bancolombia, due to the inherent conflict between client interests and the potential for personal gain. Navigating this requires a deep understanding of Bancolombia's internal policies and Colombian financial regulations, designed to prevent conflicts of interest and ensure fair treatment of clients. The core of the challenge lies in maintaining client trust and upholding the integrity of financial advice, especially when personal incentives might influence recommendations. The correct approach involves prioritizing the client's best interests above all else, adhering strictly to Bancolombia's code of conduct and relevant financial regulations. This means transparently disclosing any potential conflicts and seeking explicit client consent or internal approval before proceeding with any transaction that could be perceived as self-serving. This aligns with the ethical imperative to act as a fiduciary and the regulatory requirement to avoid situations that could compromise professional judgment or lead to client detriment. An incorrect approach would be to proceed with the transaction without full disclosure, assuming the client would benefit equally or that the personal gain is minor. This fails to meet the regulatory standard of acting in the client's best interest and violates ethical principles of honesty and transparency. Another incorrect approach would be to prioritize personal gain by subtly steering the client towards the investment that offers a higher personal commission, even if it's not the optimal choice for the client's financial goals. This constitutes a breach of trust and potentially violates regulations against misrepresentation or undue influence. Finally, ignoring the potential conflict altogether and proceeding as if no personal interest exists is a failure to proactively manage risk and uphold professional responsibility, leaving both the employee and Bancolombia exposed to regulatory scrutiny and reputational damage. Professionals at Grupo Cibest, Bancolombia, should employ a decision-making framework that begins with identifying potential conflicts of interest. This involves a thorough review of personal incentives against client needs and regulatory obligations. If a conflict is identified, the next step is to consult Bancolombia's internal policies and relevant Colombian financial regulations. The guiding principle should always be the client's welfare. If the conflict cannot be fully mitigated, or if there is any doubt about acting in the client's best interest, the professional should escalate the situation to their supervisor or compliance department for guidance and approval. Transparency and documentation are crucial throughout this process. Question 10. Governance review demonstrates that a new internal reporting process at Grupo Cibest, Bancolombia, may inadvertently create a minor discrepancy with specific reporting requirements outlined by the Superintendencia Financiera de Colombia, SFC, regarding customer transaction data. The discrepancy is not immediately obvious and does not appear to impact the overall accuracy of the data submitted to the SFC, but it does deviate from the prescribed format. What is the most appropriate course of action for the department head responsible for this new process? Option A. Proceed with the new internal reporting process as planned, assuming the minor format discrepancy will not be flagged by the SFC given the overall data accuracy. Option B. Immediately consult with the Grupo Cibest Compliance Department to understand the exact nature of the SFC reporting requirement and collaboratively develop a compliant adjustment to the internal reporting process. Option C. Implement a quick, informal workaround to the internal reporting process to align it with the SFC format, without formal documentation or consultation. Option D. Inform the SFC directly about the minor format discrepancy and request guidance on how to proceed, without making any immediate changes to the internal process. The correct answer is B. Immediately consult with the Grupo Cibest Compliance Department to understand the exact nature of the SFC reporting requirement, and collaboratively develop a compliant adjustment to the internal reporting process. Explanation. This scenario presents a professional challenge because it requires balancing the need for efficient internal operations with the stringent regulatory requirements governing financial institutions in Colombia, specifically as they pertain to Bancolombia's compliance framework. The challenge lies in identifying and rectifying potential conflicts between business objectives and regulatory mandates without compromising integrity or operational effectiveness. Careful judgment is required to ensure that any proposed solution adheres strictly to Colombian financial regulations and internal Grupo Cibest policies. The correct approach involves a proactive and collaborative engagement with the compliance department to understand the nuances of the identified regulatory gap and to develop a solution that is both compliant and operationally sound. This demonstrates a commitment to regulatory adherence and ethical conduct, which are paramount in the financial sector. Specifically, consulting with the compliance department ensures that any proposed changes are vetted against the Superintendencia Financiera de Colombia, SFC, regulations, and internal Grupo Cibest guidelines, thereby mitigating risks of non-compliance and potential penalties. This approach prioritizes a thorough understanding of the regulatory landscape before implementing changes. An incorrect approach that involves unilaterally implementing a procedural change without consulting compliance risks significant regulatory breaches. This could lead to fines, reputational damage, and operational disruptions if the change is found to be non-compliant with SFC directives or internal policies. Another incorrect approach, that of ignoring the identified gap due to perceived minor impact, is equally problematic. This demonstrates a disregard for regulatory oversight and a failure to uphold the principle of continuous improvement in compliance, potentially exposing Bancolombia to future enforcement actions. Finally, an approach that seeks to circumvent the regulatory requirement through a superficial workaround, rather than addressing the root cause, undermines the integrity of the compliance framework and is ethically unsound. Professionals should adopt a decision-making framework that begins with identifying potential issues, followed by a thorough assessment of their regulatory and ethical implications. This involves consulting relevant internal policies, external regulations, such as those from the SFC, and seeking expert advice from departments like compliance. The process should prioritize solutions that are not only effective, but also fully compliant and ethically defensible, fostering a culture of integrity and accountability within the organization. Question 11. Governance review demonstrates that a long-standing client of Grupo Cibest Bancolombia has requested a series of transactions that, while seemingly straightforward, appear to circumvent certain reporting thresholds designed to detect illicit financial activities. The client has expressed frustration with the perceived bureaucracy. Option A. Immediately report the client's request to the relevant regulatory authorities, without any prior communication with the client. Option B. Engage the client in a detailed discussion to understand the underlying objectives of the requested transactions, explain the regulatory purpose of the reporting thresholds, and collaboratively explore alternative compliant methods to achieve their goals. Option C. Proceed with the transactions as requested by the client, assuming their intent is legitimate and that the client is aware of their responsibilities. Option D. Politely inform the client that the requested transactions cannot be executed due to internal policy, without further explanation or exploration of alternatives. The correct answer is C. Proceed with the transactions as requested by the client, assuming their intent is legitimate and that the client is aware of their responsibilities. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's expressed wishes and the fiduciary duty of a financial institution like Grupo Cibest, Bancolombia, to act in the client's best interest, adhering to regulatory guidelines. The challenge lies in balancing client autonomy with the responsibility to prevent potential harm or non-compliance. Careful judgment is required to navigate this delicate balance, ensuring that client instructions are understood within the broader context of regulatory obligations and ethical conduct. The correct approach involves a thorough understanding of the client's objectives, coupled with a proactive assessment of how those objectives align with current regulations and internal policies at Grupo Cibest, Bancolombia. This includes clearly communicating any potential risks or regulatory impediments to the client and exploring alternative solutions that achieve the client's underlying goals while remaining compliant. This approach is best professional practice because it upholds the principles of client care, transparency, and regulatory adherence, which are fundamental to the integrity of financial services in Colombia. It demonstrates a commitment to both client satisfaction and responsible business conduct, as mandated by Colombian financial sector regulations. An incorrect approach that prioritizes the client's immediate instruction without due diligence fails to acknowledge the regulatory framework governing financial advice and transactions. This could lead to facilitating actions that are non-compliant, exposing both the client and Grupo Cibest, Bancolombia, to legal and reputational risks. Another incorrect approach, which is to dismiss the client's request outright without attempting to understand the underlying intent or explore compliant alternatives, can damage the client relationship and may not be the most effective way to serve the client's long-term interests. It also misses an opportunity to educate the client on regulatory constraints and best practices. Professionals should employ a decision-making framework that begins with active listening and a comprehensive understanding of the client's stated needs. This should be followed by a rigorous assessment against relevant Colombian financial regulations and Grupo Cibest, Bancolombia's internal compliance policies. If a conflict arises, the next step is transparent communication with the client, explaining the regulatory or policy constraints and collaboratively exploring compliant alternatives that meet the client's objectives. This iterative process ensures that client interests are served responsibly and ethically. Question 12. When evaluating a client's investment portfolio at Grupo Cibest Bancolombia, an employee identifies an opportunity to recommend a new, complex financial product that offers a significantly higher commission to the employee and the firm, but carries a higher risk profile than the client typically tolerates and is not directly aligned with the client's stated long-term savings goals. Which of the following represents the most appropriate course of action for the Grupo Cibest employee? Option A. Decline to recommend the new product and instead suggest alternative investments that are more suitable for the client's risk tolerance and financial goals, even if they offer lower commissions. Option B. Proceed with recommending the new product, but disclose the higher commission structure to the client, assuming the client will understand and accept the trade-off. Option C. Recommend the new product and highlight the potential for higher returns, while also mentioning the higher risk and commission, leaving the final decision entirely to the client without further guidance. Option D. Recommend the new product, emphasizing its potential for higher returns and downplaying the associated risks as it aligns with the firm's profitability objectives. Correct answer is D. Recommend the new product, emphasizing its potential for higher returns and downplaying the associated risks as it aligns with the firm's profitability objectives. Explanation. This scenario presents a professional challenge for an employee at Grupo Cibest Bancolombia due to the inherent conflict between client interests and potential personal gain, requiring careful judgment to uphold ethical standards and regulatory compliance. The core of the challenge lies in navigating situations where a client's financial well-being might be inadvertently compromised by a recommendation that benefits the employee or the institution in a less transparent manner. Adherence to Bancolombia's internal policies, which are designed to align with Colombian financial regulations, is paramount. The correct approach involves prioritizing the client's best interests above all else, ensuring that any recommendation made by a Grupo Cibest employee is solely based on the client's stated financial goals, risk tolerance, and overall financial situation. This aligns with the fundamental principles of fiduciary duty and client protection mandated by Colombian financial sector regulations, which emphasize transparency, suitability, and the prevention of conflicts of interest. Specifically, regulations overseen by the Superintendencia Financiera de Colombia, SFC, require financial institutions to act with diligence and loyalty towards their clients. An incorrect approach would be to recommend a product or service primarily because it offers a higher commission or bonus to the employee or Grupo Cibest, even if it is not the most suitable option for the client. This constitutes a conflict of interest and violates the ethical obligation to act in the client's best interest, potentially contravening SFC directives on fair treatment of customers and responsible financial advice. Another incorrect approach is to downplay or omit relevant risks associated with a financial product to secure a sale, which undermines transparency and client understanding. A clear breach of regulatory expectations for clear and accurate disclosure. Furthermore, pressuring a client into a decision without allowing adequate time for consideration or independent advice is unethical and can lead to poor financial outcomes for the client, violating principles of informed consent and responsible sales practices. Professionals at Grupo Cibest should employ a decision-making framework that begins with a thorough understanding of the client's needs and objectives. This should be followed by a comprehensive assessment of available products and services, evaluating them against the client's profile and regulatory suitability requirements. Any potential conflicts of interest must be identified and disclosed, and the recommendation must demonstrably serve the client's best interests. If a conflict cannot be adequately managed or mitigated, the recommendation should be declined or alternative, conflict-free options presented. Question 13. Governance review demonstrates that a long-standing client of Grupo Cibest Bancolombia has requested a significant reallocation of their portfolio into a highly speculative, illiquid asset class, citing recent market trends observed in social media. The client expresses strong conviction and urgency in executing this change. Option A. Proceed with the reallocation as requested by the client, documenting their explicit instruction and acknowledgement of the risks involved. Option B. Conduct a comprehensive suitability assessment, including a detailed discussion about the client's risk tolerance, investment objectives, and understanding of the requested asset class before making any recommendations. Option C. Immediately decline the client's request, citing the speculative nature of the asset class and advising them to seek advice elsewhere. Option D. Reallocate a small portion of the portfolio to the requested asset class to appease the client, while maintaining the majority in more stable investments. The correct answer is A. Proceed with the reallocation as requested by the client, documenting their explicit instruction and acknowledgement of the risks involved. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's expressed desire for a specific investment strategy and the fiduciary duty of Grupo Cibest Bancolombia to act in the client's best interest, considering their risk profile and regulatory obligations. The challenge lies in balancing client autonomy with the responsibility to provide sound, compliant financial advice. Careful judgment is required to ensure that any recommended strategy aligns with regulatory requirements and ethical standards, rather than solely fulfilling a client's immediate, potentially ill-informed request. The correct approach involves a thorough assessment of the client's financial situation, risk tolerance, and investment objectives, followed by a clear explanation of the implications and suitability of the requested strategy. This aligns with the principles of Know Your Client (KIC) and suitability, which are fundamental to financial advisory services under Colombian regulations governing financial institutions like Bancolombia. Specifically, it adheres to the Superintendencia Financiera de Colombia, SFC, guidelines that mandate financial advisors to understand their clients' profiles and recommend products and services that are appropriate for them, ensuring fair treatment and preventing undue risk. An incorrect approach would be to immediately implement the client's requested strategy without due diligence. This fails to uphold the fiduciary duty and regulatory requirement to assess suitability. It exposes both the client and Grupo Cibest, Bancolombia, to significant risks, potentially leading to financial losses for the client and regulatory sanctions for the institution. Another incorrect approach is to dismiss the client's request outright without proper explanation or offering alternatives. This demonstrates a lack of client engagement and could be perceived as poor service, potentially violating principles of customer care and transparency expected by the SFC. Finally, recommending a strategy that is technically compliant but clearly misaligned with the client's stated objectives or risk tolerance, simply to satisfy the request, is also an ethically and regulatorily unsound practice, as it undermines the spirit of suitability and client-centric advice. Professionals should employ a decision-making framework that prioritizes understanding the client's needs and circumstances, evaluating the regulatory landscape, and then proposing solutions that are both compliant and in the client's best interest. This involves active listening, clear communication, and a commitment to ethical conduct, ensuring that all recommendations are justifiable and documented. Question 14. Analysis of a situation where a Grupo Cibest, Bancolombia, financial advisor, while reviewing a client's portfolio, discovers a significant personal investment opportunity that is not yet publicly known and could greatly benefit the client. The advisor also recognizes that this opportunity aligns with a personal investment strategy they have been considering for themselves. What is the most appropriate course of action for the Grupo Cibest employee? Option A. Keep the personal investment opportunity confidential and proceed with their own investment, advising the client on alternative, less impactful strategies. Option B. Immediately inform the client about the opportunity and recommend they invest, while also pursuing the personal investment strategy independently. Option C. Advise the client to wait for further market developments before making any decisions, while discreetly making their own personal investment in the opportunity. Option D. Disclose the potential conflict of interest to their supervisor and the client, and seek guidance on how to proceed, ensuring the client's interests are prioritized and any personal involvement is managed according to internal policies and regulations. Correct answer is B. Immediately inform the client about the opportunity and recommend they invest, while also pursuing the personal investment strategy independently. Explanation. This scenario presents a professional challenge for an employee at Grupo Cibest, Bancolombia, due to the inherent conflict between client interests and potential personal gain, requiring careful judgment to uphold ethical standards and regulatory compliance. The core issue revolves around ensuring that all client interactions and advice provided by Grupo Cibest employees are solely in the best interest of the client, free from any undue influence or personal benefit. The correct approach involves prioritizing the client's financial well-being and objectives above all else, even if it means forgoing a potentially lucrative personal opportunity. This aligns with the fundamental principles of fiduciary duty and client protection mandated by Colombian financial regulations, which emphasize transparency, loyalty, and acting in good faith. Specifically, regulations governing financial advisory services and the conduct of financial institutions in Colombia would require employees to disclose any potential conflicts of interest, and to ensure that recommendations are objective and suitable for the client's profile. An incorrect approach would be to leverage confidential client information for personal investment purposes. This constitutes a severe breach of client confidentiality and trust, violating ethical codes of conduct and potentially contravening data protection laws in Colombia. Such an action could lead to significant reputational damage for Grupo Cibest and severe regulatory penalties. Another incorrect approach would be to steer a client towards a product or service that benefits the employee personally, even if it is not the most suitable option for the client. This demonstrates a lack of integrity and a failure to act in the client's best interest, directly contradicting the principles of fair dealing and suitability expected of financial professionals. Professionals at Grupo Cibest should employ a decision-making framework that begins with identifying potential conflicts of interest. They must then assess the impact of these conflicts on client interests and regulatory obligations. If a conflict exists, the professional should seek guidance from their supervisor or compliance department, and in most cases, recuse themselves from the situation or ensure that the client's interests are unequivocally protected through disclosure and independent advice. The guiding principle should always be to act with honesty, integrity, and in strict adherence to the regulatory framework governing financial services in Colombia. Question 15. The efficiency study reveals potential cost savings through the adoption of new digital platforms for client onboarding and transaction processing at Grupo Cibest, Bancolombia. However, some proposed platforms have not undergone a full review against Colombian data protection laws and financial sector regulations. Which of the following represents the most prudent and compliant approach for Grupo Cibest, Bancolombia, to proceed? Option A. Prioritize the implementation of platforms offering the highest immediate cost savings, assuming that regulatory bodies will be lenient with initial adoption phases. Option B. Conduct a thorough due diligence and regulatory compliance assessment of each proposed digital platform against Colombian laws, including data privacy, Ley 1581/2012, and financial sector regulations. Before any implementation, Option C. Outsource the regulatory compliance review to the vendors of the new digital platforms, trusting their assurances of adherence to Colombian legal frameworks. Option D. Implement the new digital platforms immediately to realize cost savings, with a plan to address any regulatory compliance issues that may arise post-implementation. The correct answer is D. Implement the new digital platforms immediately to realize cost savings, with a plan to address any regulatory compliance issues that may arise post-implementation. Explanation. This scenario presents a professional challenge because it requires balancing the pursuit of operational efficiency with strict adherence to regulatory mandates and ethical conduct within the financial services sector, specifically as governed by Colombian regulations applicable to entities like Grupo Cibest, Bancolombia. The core tension lies in identifying cost-saving measures that do not compromise client data security, regulatory compliance, or the integrity of financial operations. Careful judgment is essential to avoid actions that could lead to significant legal repercussions, reputational damage, and loss of client trust. The correct approach involves a thorough review of all proposed efficiency measures against the specific requirements of Colombian financial regulations, including those overseen by the Superintendencia Financiera de Colombia, SFC. This includes assessing how any changes might impact data privacy, e.g., Ley 1581/2012, anti-money laundering, AML, and Know Your Customer (KIC) procedures, and the overall security of financial transactions. Prioritizing measures that demonstrably enhance efficiency without introducing new risks or violating existing laws is paramount. This aligns with the ethical duty of care owed to clients and the regulatory obligation to maintain a sound and compliant financial institution. An incorrect approach would be to implement efficiency measures solely based on cost reduction, without a comprehensive regulatory impact assessment. For instance, adopting a new technology that promises cost savings but has not undergone rigorous security audits or does not comply with data localization requirements would be a significant regulatory failure. Similarly, streamlining client onboarding processes by reducing the depth of due diligence checks would violate AML/KYC regulations, exposing Grupo Cibest, Bancolombia to severe penalties and reputational harm. Another failure would be to outsource critical data processing functions to third parties without ensuring their compliance with Colombian data protection laws and contractual obligations for security and confidentiality. Professionals should employ a structured decision-making framework that begins with understanding the specific regulatory landscape relevant to Grupo Cibest, Bancolombia, in Colombia. This involves proactive engagement with compliance and legal departments to vet any proposed efficiency initiative. A risk-based approach should be adopted, where potential benefits are weighed against potential regulatory, legal, and ethical risks. Prioritization should be given to solutions that offer clear efficiency gains while demonstrably meeting or exceeding all applicable legal and ethical standards. Continuous monitoring and periodic reassessment of implemented measures are also crucial to ensure ongoing compliance. Question 16. Benchmark analysis indicates that a client of Grupo Cibest, Bancolombia, has expressed significant dissatisfaction with the performance of a financial product, claiming it does not meet the expectations set during the sales process. Which of the following approaches best reflects the expected professional conduct and regulatory compliance for an employee of Bancolombia in this situation? Option A. Immediately offer a partial refund and apologize for any inconvenience without further investigation to de-escalate the situation quickly. Option B. Suggest the client consult external financial advisors to understand the product better, shifting the responsibility for product comprehension away from Bancolombia. Option C. Politely inform the client that the product is functioning as per its design specifications and that any perceived shortfall is due to their misunderstanding of its capabilities. Option D. Acknowledge the client's concerns, gather details about their experience and expectations, and then provide a clear, factual explanation of the product's features and limitations, referencing relevant documentation. The correct answer is A. Immediately offer a partial refund and apologize for any inconvenience without further investigation to de-escalate the situation quickly. Explanation. Scenario analysis. This scenario presents a professional challenge for an employee at Grupo Cibest, Bancolombia, where a client expresses dissatisfaction with a product's performance, potentially due to misrepresentation or a misunderstanding of its capabilities. The challenge lies in balancing the need to address client concerns promptly and effectively with the regulatory obligations and ethical standards expected of financial institutions in Colombia. A hasty or dismissive response could lead to reputational damage, regulatory scrutiny, and loss of client trust, while an overly accommodating response might set unsustainable precedents or violate internal policies. Careful judgment is required to navigate these competing demands. Correct approach analysis. The correct approach involves acknowledging the client's concerns empathetically, gathering all relevant information about the product and the client's expectations, and then explaining the product's features and limitations clearly and factually, referencing any documentation or agreements. This approach aligns with the principles of transparency and fair dealing mandated by Colombian financial regulations, which emphasize providing accurate information to clients and ensuring they understand the products they are engaging with. It also upholds ethical standards by prioritizing client satisfaction through honest communication and problem-solving, rather than avoiding responsibility. Incorrect approach is analysis. An approach that immediately offers a refund or compensation without a thorough investigation risks setting a precedent for unwarranted claims and could be seen as an admission of fault where none exists, potentially violating internal financial controls and regulatory guidelines on responsible product sales. An approach that dismisses the client's concerns by stating the product is functioning as designed, without attempting to understand the client's specific situation or expectations, fails to uphold the duty of care and could be interpreted as a lack of customer service, potentially leading to complaints to regulatory bodies like the Superintendencia Financiera de Colombia. An approach that blames the client for misunderstanding the product's functionality, without offering any constructive explanation or support, is unprofessional and can damage the client relationship, potentially leading to formal disputes and negative publicity. Professional reasoning. Professionals at Grupo Cibest, Bancolombia, should adopt a structured approach to client complaints. This involves active listening, thorough fact-finding, clear and honest communication, and adherence to internal policies and external regulations. When faced with client dissatisfaction, the decision-making process should prioritize understanding the root cause of the issue, evaluating it against contractual obligations and regulatory requirements, and then formulating a response that is both fair to the client and compliant with the company's operational and ethical framework. Question 17. Research into internal reporting procedures at Grupo Cibest, Bancolombia, reveals a junior analyst mistakenly included sensitive client financial data in a routine internal report shared with a broader team, exceeding the intended audience. What is the most appropriate immediate action for the analyst to take? Option A. Assume the information is not critical and wait to see if any issues arise before taking any action. Option B. Forward the report to the intended recipients with a note explaining the accidental inclusion of extra data. Option C. Immediately report the accidental disclosure to the Grupo Cibest, Bancolombia, compliance and legal departments, detailing the nature of the information shared and the unintended recipient group. Option D. Attempt to recall or delete the report from the shared system and inform only the immediate supervisor of the error. The correct answer is C. Immediately report the accidental disclosure to the Grupo Cibest, Bancolombia, compliance and legal departments, detailing the nature of the information shared and the unintended recipient group. Explanation. This scenario presents a professional challenge rooted in the ethical obligation to maintain client confidentiality and the regulatory requirement for accurate and timely reporting within the financial services sector, specifically as it pertains to Grupo Cibest Bancolombia. The tension arises when a junior analyst, acting in good faith but lacking full understanding of internal protocols and regulatory boundaries, inadvertently breaches confidentiality while attempting to fulfill a reporting obligation. Navigating this requires a delicate balance between transparency, accountability, and the protection of sensitive client information, all within the strictures of Colombian financial regulations. The correct approach involves immediate, transparent, and responsible disclosure to the appropriate internal compliance and legal departments at Grupo Cibest Bancolombia. This demonstrates an understanding of the gravity of the situation and prioritizes adherence to regulatory frameworks that mandate reporting of potential breaches and the implementation of corrective actions. By escalating the issue internally, the analyst ensures that the company can conduct a thorough investigation, assess the actual impact of the disclosure, and take necessary steps to mitigate any regulatory or reputational damage, thereby upholding the principles of integrity and compliance expected of financial institutions. An incorrect approach would be to attempt to rectify the situation independently without informing superiors or compliance. This could involve deleting the information or attempting to contact the recipient directly to request its return, which could be construed as an attempt to conceal the breach, further exacerbating the regulatory implications and potentially violating data protection laws. Another incorrect approach would be to ignore the incident, hoping it goes unnoticed. This is a clear violation of ethical duties and regulatory mandates for reporting and risk management, exposing Grupo Cibest Bancolombia to significant penalties and reputational harm. Finally, disclosing the incident to colleagues not involved in the compliance or investigation process would constitute a further breach of confidentiality, undermining trust, and potentially creating wider internal and external issues. Professionals in this situation should follow a clear decision-making framework. 1. Recognize the potential breach and its implications. 2. Immediately cease any further unauthorized disclosure. 3. Report the incident through established internal channels to compliance and legal departments. 4. Cooperate fully with any subsequent investigation. 5. Learn from the experience to prevent future occurrences. This structured approach ensures that regulatory obligations are met, ethical standards are upheld, and the integrity of Grupo Cibest Bancolombia is protected. Question 18. Governance review demonstrates that Bancolombia is considering a significant project to integrate customer data from various internal systems into a centralized platform to improve operational efficiency and customer service. Which approach best ensures compliance with Colombian financial regulations and data protection laws? Option A. Prioritize the speed of integration to realize efficiency gains quickly, deferring detailed regulatory review until after the platform is operational. Option B. Delegate the responsibility for regulatory compliance to the IT project management team without specific legal or compliance expertise. Option C. Proceed with the integration, assuming existing IT security protocols are sufficient, and address any compliance issues that arise post-implementation. Option D. Engage the internal audit and compliance departments early in the project lifecycle to identify all relevant regulatory requirements and design the integration with compliance as a core objective. The correct answer is C. Proceed with the integration, assuming existing IT security protocols are sufficient, and address any compliance issues that arise post-implementation. Explanation. This scenario presents a professional challenge because it requires balancing the need for efficient internal operations with the stringent regulatory obligations of a financial institution like Bancolombia. The challenge lies in ensuring that, while seeking to streamline processes, the company does not inadvertently compromise its adherence to Colombian financial regulations, particularly concerning data privacy and customer information handling. Careful judgment is required to identify and implement solutions that are both effective and compliant. The correct approach involves proactively engaging with the internal audit and compliance departments to understand the specific regulatory requirements and potential risks associated with the proposed data integration project. This ensures that any solution developed is designed from the outset to meet the standards set by the Superintendencia Financiera de Colombia, SFC, and relevant data protection laws. This approach is best professional practice because it prioritizes regulatory adherence and risk mitigation, which are fundamental to maintaining the trust and integrity of a financial institution. By involving these departments early, Bancolombia can ensure that the project aligns with legal mandates, such as those governing the confidentiality and security of customer financial information, thereby avoiding potential sanctions and reputational damage. An incorrect approach would be to proceed with the data integration without consulting the compliance and internal audit teams. This failure stems from a disregard for established regulatory frameworks and internal control mechanisms. Specifically, it risks violating data protection laws by potentially exposing sensitive customer information or failing to implement adequate security measures, which could lead to significant fines from the SFC and legal repercussions. Another incorrect approach is to assume that existing IT security protocols are sufficient without a specific review for this new integration. This overlooks the unique risks associated with consolidating data from disparate systems and may not adequately address the specific requirements of Colombian financial regulations for data handling and reporting, potentially leading to non-compliance and operational vulnerabilities. Finally, prioritizing speed of implementation over thorough regulatory due diligence is a critical failure. While efficiency is desirable, it cannot come at the expense of legal and ethical obligations. This haste could result in overlooking crucial compliance steps, such as obtaining necessary customer consents or implementing robust data anonymization techniques where required by SFC guidelines, thereby exposing Bancolombia to regulatory scrutiny and penalties. The professional decision-making process for similar situations should involve a structured risk assessment that explicitly includes regulatory compliance as a primary consideration. Before embarking on any significant operational change, especially one involving data, professionals should 1. Identify all relevant regulations and internal policies. 2. Consult with legal, compliance, and internal audit departments to understand specific requirements and potential risks. 3. Develop a compliance plan integrated into the project lifecycle. 4. Conduct thorough testing to ensure compliance and security before full implementation. 5. Establish ongoing monitoring mechanisms to ensure continued adherence to regulations. Question 19. Comparative studies suggest that employees at financial institutions like Grupo Cibest, Bancolombia, often face situations where client requests may intersect with internal policy limitations. If a client of Grupo Cibest, Bancolombia, asks for specific, non-public market analysis data that is not typically shared directly with individual clients, but is available internally for research purposes, what is the most appropriate course of action for an employee to take? Option A. Share the requested market analysis data with the client via an unsecured personal email account to expedite the process. Option B. Immediately provide the client with the requested market analysis data, assuming the client's intent is benign and the information is readily accessible. Option C. Politely inform the client that the requested information cannot be provided due to internal policy without offering further assistance or explanation. Option D. Explain to the client that while direct provision of the specific data is restricted, the employee can offer to provide general market commentary or direct them to publicly available research reports that might address their interests, and if necessary, consult with the compliance department for guidance on what can be shared. The correct answer is C. Politely inform the client that the requested information cannot be provided due to internal policy without offering further assistance or explanation. Explanation. This scenario is professionally challenging because it requires an employee of Grupo Cibest Bancolombia to navigate a situation where a client's request might conflict with internal policies designed to protect both the client and the institution. The core challenge lies in balancing client service with regulatory compliance and ethical conduct, particularly concerning the handling of sensitive financial information and the prevention of potential conflicts of interest or market abuse. Careful judgment is required to ensure that actions taken are both legally sound and ethically defensible, upholding the reputation and integrity of Grupo Cibest, Bancolombia. The correct approach involves a thorough understanding and application of the internal policies and relevant Colombian financial regulations. This approach prioritizes client confidentiality and data security, while also adhering to the established procedures for handling client requests. By seeking clarification from the appropriate internal department, the employee demonstrates a commitment to compliance and risk mitigation. This aligns with the principles of responsible financial intermediation and the duty of care owed to clients, as often stipulated in financial sector regulations in Colombia, which emphasize robust internal controls and adherence to established protocols for information handling and client interactions. An incorrect approach that involves directly fulfilling the client's request without proper authorization or verification would be professionally unacceptable. This failure would stem from a disregard for internal control frameworks and potentially violate data protection laws or regulations governing the sharing of non-public information. Another incorrect approach, such as dismissing the client's request outright without exploring legitimate avenues for assistance or explanation, could lead to client dissatisfaction and damage the relationship with Grupo Cibest, Bancolombia, potentially missing an opportunity to serve the client within regulatory boundaries. A third incorrect approach, which involves sharing the information through informal channels or with unauthorized personnel, represents a severe breach of confidentiality and regulatory compliance, exposing both the client and the institution to significant risks. Professionals in this situation should employ a decision-making framework that begins with understanding the client's request and its potential implications. This should be followed by a review of relevant internal policies and applicable Colombian financial regulations. If there is any ambiguity or potential conflict, the next step is to consult with the designated compliance or legal department within Grupo Cibest Bancolombia. This structured approach ensures that decisions are informed, compliant, and ethically sound, prioritizing the protection of client interests and the integrity of the financial institution. Question 20. Governance review demonstrates that a senior analyst at Grupo Cibest Bancolombia, responsible for evaluating potential investment opportunities for clients, has learned of a private placement opportunity in a startup company. This startup is in a sector that Grupo Cibest Bancolombia is actively advising other clients on, and the analyst's close family member is a significant shareholder in this startup. The analyst is considering investing personally in this private placement. Which of the following represents the most appropriate course of action for the analyst under the regulatory framework applicable to Grupo Cibest Bancolombia? Option A. Divest from the startup's existing shares held by the family member before considering the personal investment to avoid any perceived conflict. Option B. Immediately disclose the potential personal investment and the familial relationship to the Grupo Cibest Bancolombia Compliance Department for assessment and guidance. Option C. Discuss the investment opportunity with a trusted senior colleague to gauge their opinion before making a decision. Option D. Proceed with the personal investment, as it is a private matter and does not directly involve client funds or decisions. Correct answer is B. Immediately disclose the potential personal investment and the familial relationship to the Grupo Cibest Bancolombia Compliance Department for assessment and guidance. Explanation. Scenario analysis. This scenario presents a challenge for Grupo Cibest Bancolombia employees in navigating the ethical and regulatory landscape when faced with potential conflicts of interest. The core difficulty lies in balancing the company's interests with personal gain, while adhering strictly to Colombian financial regulations and internal ethical codes. A misstep can lead to significant reputational damage, regulatory sanctions, and loss of client trust. Correct approach analysis. The correct approach involves immediate and transparent disclosure of the potential conflict of interest to the appropriate internal compliance department at Grupo Cibest Bancolombia. This aligns with the principles of integrity and transparency mandated by Colombian financial sector regulations, such as those overseen by the Superintendencia Financiera de Colombia, SFC. Prompt disclosure allows the company to formally assess the situation, implement necessary controls, e.g., recusal from decisions, and ensure compliance with all applicable laws and internal policies, thereby safeguarding both the individual and the institution. Incorrect approach is analysis. One incorrect approach is to proceed with the investment without informing anyone, assuming it poses no direct conflict. This fails to acknowledge the potential for indirect influence or the appearance of impropriety, which can still violate ethical standards and regulatory expectations for financial institutions. It bypasses the established internal control mechanisms designed to prevent conflicts of interest. Another incorrect approach is to seek advice from a colleague without formal reporting. While collegial advice can be helpful, it does not substitute for the official reporting and assessment process required by Grupo Cibest, Bancolombia, and its regulators. This informal route lacks the documentation and oversight necessary to ensure proper handling of a conflict of interest. A third incorrect approach is to divest from the investment immediately before reporting. While this might seem like a solution, it still fails to address the initial ethical lapse of considering an investment that could create a conflict. Furthermore, it bypasses the company's established procedures for managing such situations, which may require a formal review even after divestment to understand the circumstances and prevent recurrence. Professional reasoning. Professionals at Grupo Cibest, Bancolombia, should adopt a proactive and transparent approach to potential conflicts of interest. The decision-making framework should prioritize adherence to the regulatory framework of Colombia and the company's code of conduct. When a potential conflict arises, the immediate step is to identify it, understand its nature, and then report it through the designated channels within the organization. This ensures that the situation is managed appropriately, with due consideration for regulatory compliance, ethical obligations, and the protection of the company's reputation and client interests.